The dramatic 82% correction in the price of supermicrocomputer has sent waves of concern through the investment community. Is this the bottom, or are we heading toward further declines and even bankruptcy? To answer that, we need to look deeper into what kind of company Supermicro is, what factors have fueled its growth, and what risks lie ahead. Founded in 1993 by Charles Liang, Supermicro Computer, commonly known as Supermicro, emerged from the heart of Silicon Valley, San Jose, California. Liang, a seasoned veteran in the computer industry, had one clear vision: to design and produce high-performance, energy-efficient server solutions. From the beginning, Supermicro focused on catering to the specialized needs of data centers, cloud computing, and mission-critical applications. Early in its history, Supermicro made a name for itself by designing motherboards and servers that offered customizability for clients, setting it apart from other hardware companies. As the company grew, it expanded into international markets, particularly Europe and Asia, providing tailored hardware solutions to a rapidly expanding world of cloud computing, high-performance computing, and enterprise IT. Over the years, Supermicro became a global player, bolstered by its continuous push toward innovation and energy efficiency. The company's mantra, "We keep it green," underscored its commitment to reducing power consumption while delivering high-performance systems. This focus on energy efficiency resonated strongly with environmentally conscious clients in data centers and the growing tech industry. Supermicro's technological advancements were key to its success in the 2010s. The company invested heavily in new technologies, including AI, machine learning, and deep learning, capitalizing on the growing need for big data analytics and GPU-accelerated computing. Supermicro's partnership with key industry giants like Intel, AMD, and NVIDIA helped it remain at the cutting edge of high-performance computing. During this period, Supermicro expanded its product portfolio to include several new server lines, such as Superblade, Ultra, Twin Pro, storage solutions. These new offerings help the company diversify and meet the increasingly complex demands of clients in sectors like cloud computing, AI, telecommunications, and more. As AI, machine learning, and cloud computing grew even more prominent in the 2020s, Supermicro continued to position itself at the forefront of this transformation. The company focused on high-performance servers optimized for AI workloads, especially those using NVIDIA GPUs and other AI accelerators. Its products became increasingly integral to the growing infrastructure needs of cloud data centers, where performance and scalability were paramount. By 2023, Supermicro had established itself as a major supplier of servers for edge computing and 5G infrastructure, expanding into new markets with high demand for low-latency, high-throughput systems. During this time, the company also saw a significant revenue surge, particularly during the COVID-19 pandemic when demand for data center and cloud infrastructure exploded. Supermicro's revenue hit $6.6 billion in fiscal 2023, reflecting strong demand for its cutting-edge solutions in HPC and AI. In recent years, Supermicro deepened its partnerships with tech giants like Amazon Web Services, Microsoft, and Google, delivering energy-efficient, custom-built servers for large-scale cloud infrastructure projects. Sustainability became a key focus as well, with the company introducing more eco-friendly products aimed at reducing power consumption and CO2 emissions. Their commitment to net zero emissions by 2050 further solidified their dedication to green technologies. However, despite these impressive achievements, Supermicro's stock price has faced substantial volatility. After a major price correction, many investors are now questioning whether the company can continue to capitalize on the demand for cloud and data center infrastructure, or if the stock's fall is a sign of deeper trouble. Supermicro's journey from a small startup to a global leader has been nothing short of impressive. But like any company, it faces significant risks. The COVID-19 pandemic highlighted how vulnerable tech companies are to global supply chain disruptions. Supermicro, reliant on third-party suppliers for key components like semiconductors and processors, is susceptible to delays, shortages, and rising material costs. The ongoing global chip shortage, in particular, is a concern for Supermicro's ability to meet demand. The server and data center hardware market is fiercely competitive. Supermicro faces pressure from major players like Dell Technologies, Hewlett-Packard Enterprise, and Cisco, as well as from cloud providers like Amazon Web Services and Google Cloud, who are increasingly building their own custom servers. With manufacturing facilities in Taiwan and China, Supermicro is exposed to the ongoing trade tensions between the US and China. Increased tariffs or export controls could disrupt the company's operations, especially as geopolitical tensions continue to rise. The technology landscape is constantly evolving. Supermicro needs to stay ahead of rapid changes in cloud computing, AI, and edge computing. Failure to adapt quickly enough to new trends could result in product obsolescence. The company has faced security challenges in the past, notably the controversial 2018 allegations of Chinese spyware embedded in their hardware. While these claims were denied, the controversy raised questions about Supermicro's supply chain security. Any future breaches or security incidents could damage the company's reputation and erode customer trust. As a provider of IT infrastructure solutions, Supermicro is also at the mercy of broader economic conditions. In times of economic downturn, companies may scale back on IT spending, including large capital expenditures for data centers. This could lead to reduced sales and revenue fluctuations for Supermicro. Supermicro's future appears to be full of opportunity, particularly with the growing demand for AI-driven infrastructure, cloud computing, and data centers. The company has a solid track record of innovation, a global presence, and strong relationships with key industry players. However, the sharp drop in SMCI's stock price highlights the risks that come with investing in the company. Whether the stock has reached its bottom or is just beginning a prolonged slide depends on how Supermicro navigates its challenges: supply chain issues, geopolitical tensions, fierce competition, and the ever-evolving technological landscape. Despite these challenges, Supermicro's ability to adapt to new trends and continue innovating makes it a potentially valuable player in the IT infrastructure space, just as long as the company can manage these risks effectively. Investors should carefully weigh the company's growth potential against these ongoing challenges before making any decisions. While the company's long-term prospects may remain strong, the near-term volatility suggests caution may be prudent.